when they come to me, they always tell me, KS, how should I do it? And what should I buy? Okay, and these are the how and the what. What I want to know is the why. Why are you doing it? What is the outcome that you want to achieve? And then we work. Hi everyone, it's KS here. Welcome to today's special edition of the Investors Pocket Bible Educational Masterclass series, where I'll be touching on how we can discover the right property to match your investment goal. This evening masterclass is an insightful one where we learn how we can still achieve a six-figure capital gain in a new launch market segment, even as the price continue to climb. I hope this session comes in a very timely manner to give you additional insights, especially so if you are still looking to enter the real estate market today. In this session, I'll be doing a quick recap on the urban transformation fundamentals and how it could potentially impact your real estate investment. So for those of you who have attended my previous masterclasses before, you know that I only deliver pure value. So today's masterclass will be no exception as well. So again, today we are focusing on how we can discover or uncover the right property to match your investment goal. And if you've been in the market this year looking for specifically new launches only, for the past 6 months, you would have witnessed the strong take-up rate of more than 70% at these two launches called Piccadilly Grand and also Live at MB. So the million-dollar question here for many is all new launches a sure win? Correct? Okay. If this question resonates well with you, today's masterclass would definitely give you applicable tools on how you can select the winning property based on your profile. The keyword here is on your profile. Okay. As mentioned in all my previous master classes, I want you to approach today's session with an open mind. So any fixed ideas, judgments, and concepts that you already have, I want you to put them all aside, because I wanted to share with you will debunk some of the concepts and frame of reference that you may already have subconsciously. So without further ado, let me put up on the screen the overview of today's masterclass chapters. So this is the overview of today's masterclass. Topic number 1, we will be touching about you, your profile that matters. So specifically, we'll be touching on two profiles. One is a young family looking to buy in their first property with a kid. And the other profile is single investor, or if not, investors that are buying their secondary property. That means they already have a property for stay and buying another one for pure investment. So number 2, how to select based on your profile, the practical application. And in this instance, we'll be using the urban transformation fundamental as our guiding principle. And number 3, capital gain focus. Again, when we buy into properties, we need to understand the project timeline based on the urban transformation zone. So we will be doing a quick recap on this zoning and how we can time the right exit to give you the highest capital gain. All right. So topic number 1, without further ado, let's go into your profile that matters. So 2 main factors that always affect an asset. Over here, the marketplace is one of them. And secondly, it's your profile. We're going to match these two together to give you the bulletproof roadmap. Okay, that's what I always do with our client when we go on a one-on-one discovery call. So over here, we focus a lot about the marketplace first. And again, many a times, especially so in today's market, we talk about a lot about the interest rates, which I'll cover shortly. All right. So first thing first, we talk about the GDP of the country. And we also talk about inflation, which is going pretty high right now, and also the bank interest rate. So we learned that today just came out from OCBC, DBS, and even UOB as well. They mentioned that fixed rates are going as high as 3%. All right. So for many of you who missed out the last masterclass where I invited my very good friend, CEO of Mortgage Master, David Bay, where we dive into deep data of over a decade of interest rate and how property prices has actually performed in tandem with rising interest rate, you could click on scan on this QR code, and this will link you to some of the YouTube channels or videos that I've done on it. All right. So if you are very concerned about interest rate and how it will affect you, just take your phone, scan on this, and then keep the URL code for later. All right. But today we focus on today's masterclass to uncover the winning properties for your profile. Okay. So next, we talk about the market cycle. We'll touch a bit on that as well. Lifespan of a property. We learned that lifespan of property is about 15 years. And beyond that, property prices more often than not will stagnate. understanding developers' margin, and also execution of the right entry and the multiple exit strategy in place for you to get the maximum growth to your horizon. And finally, we talk about urban transformation, which is the keynote of one of the recap that we'll be touching on today. And next, urban transformation zone. This is areas where the government is investing heavily in infrastructure that have an impact on your property prices. All right. So in this instance, if we talk about the URA website, so it's a quick recap of the Urban Transformation Investors Pocket Bible Series Masterclass, where this area, that if you were to look up on the URA website, this falls under the urban transformation zoning. All right. So you have Changi region, Greater Rustic Coast, Greater Southern Waterfront, the Kallang River, Kampong Bugis, Bayshore New Town, Rio Corridor, Woodland Regional Center, and the Punggol Digital District. All right. And these are also under the URA action plan as well that falls under the urban transformation. So Jurong Lake and Innovation District, Paya Lebar Air Base, Ophir Rochor Corridor, Bidadari Town, Beauty World Integrated Transport Hub, Novena Health City, Tengah New Town, and also revitalizing Orchard, plus the newly introduced Dover Knowledge District in the last 2019 master plan. All right. And with all these, if you really want to take reference from, you could always go into URA website, that's the link, and you can find out these are the different initiatives for urban transformation. So urban transformation fundamentals, a quick recap as well. These are specific guiding principles for investors for following the around the property that influences performances. So what it means is that you need to follow these fundamentals, and in the main masterclass, I did share that there are 5 key fundamentals. Okay, so what is these specific guiding principles here? A quick recap. Firstly, we'll be touching on within urban transformation planning area, new homes or new launches have higher price resistance in a downturn market compared to resale property. All right. So in this instance, what we mean is that in a more prudent investment manner, we learned that resale property actually has a lesser price resistance. Okay. And next, we then talk about never purchase the last residential launch in the precinct. And in this instance, it also means that the last plot of land is always what salesperson on the ground like to tell you, you don't buy this no more already, correct? So rather than just buying into it because it's the last plot of land by fear of missing out, what you need to know is that land cost gets more expensive through time. So if it's the last plot of land, it means that it's the highest so-called land cost that will be bidded, and that will be translated to the highest so-called launch price in the area. And you do not want to break such record for your investment property, correct? So never purchase the last plot of land in a precinct. And then always select project within walking distance to an existing or upcoming train station. And in the next few recommendations that we're going to do later, we are keeping within a matrix of not more than 800 meters of a party train station within walking distance. And then next, having a reputable primary school is very important within 1 km because this is an evergreen strategy, especially so in Singapore context. If you stay within 1 km, you have priority to go into the school. Okay. And in the instance, if you're not buying for that school, that means you're not in the family profile, you say that, AKS, I am only buying a 1-bedder and I am a single investor. I'm not married. Okay. I don't need that school. I can only afford a 1.2 million property. What do? Then you buy in a business park because that's where we have the skilled workers that are able to pay for your asking rental. Okay. And this will eventually translate to a higher rental yield, which means your property prices will also organically increase as well. Okay. And then next, having the right entry and multiple exit strategy time to this transformation milestone is key to maximize your capital gain. So if you have missed out on or you need a quick recap on the Urban Transformation Masterclass, or you get lost about what I just mentioned, okay, this is a 2 hours masterclass that I've done. If you met me for the second time today, that was the first masterclass that you have met me at, all right? So do take your so-called phone and then scan on this QR code. And once you scan on this and you start playing it, it's a countdown timer. You left 48 hours to finish this masterclass, all right? So do scan on it if you need a quick recap. Next, we did talk about the market cycle today, and right now we are all in a seller's market. Would you all agree? So, seller's market, yes, it is. And of course, if you were to think that you are really priced out, given the fact that the developers are all asking very high prices. It used to be when you have 1.2 million, 1.1 million, or even 1 million, you are able to enter the new homes sales segment. But in today's context, because of the rate that how developers are bidding land aggressively with one another, we see that even with 1 to 1.2 million, you can't really buy much or any inventory left in the market that's around this price tag. So if you feel that this is you, so what we have done, if you see the QR code that says seller's market, in this masterclass that I did, and of course being cut down into YouTube video, it says the uncovering investment potential in a limited marketplace. So this masterclass is for people who feel that, hey, KS, today I only have 1 million to 1.2 million. I don't think there's anything in the new home sales segment that allows me to plan my investment. Okay, I'm being priced out. So this video will actually show you a list of 30 development, a master list of it that me and my research team have came up with to showcase how are you still going to profit, but at the longer horizon. So what it means is that you can't go in and out within 3 to 5 years to make maximum profit. But in this kind of market gameplay, which is the resale market gameplay, you will basically only enjoy about 2 to 2.5% or sometimes maximum 3% year on year. All right, because the fact that you are buying off from someone else in the resale market, and for you to make that profit within that short horizon is almost too short a runway. Okay, so in this instance, we would likely have a 6 to 10 years horizon, and if that's you, you need to utilize the property right away, and you can't wait for it to build. This is the right masterclass for you to go into. So today I'm showing a lot of QR code here because I'm going really quick, not to miss out any profile out there that may not be suitable for what we are going through today. Because today we're just going to touch on 2 very specific profile. All right. So next we'll be touching on the specific profile, the 2 profiles we are talking about. And with that, we also need to know their intent of purchase. So again, when you want to buy something, we always need to know your intent. And I always, when I go on the discovery call, I always tell the client, we need to know what is your end goal, what is the outcome. Okay. Very importantly, because many people are very process oriented. What I mean by process oriented, they want to know, when they come to me, they always tell me, KS, how should I do it? And what should I buy? Okay. And these are the how and the what. What I want to know is the why. Why are you doing it? What is the outcome that you want to achieve? And then we work backwards. Okay. So intent of purchase is very important. In this instance, there are a few intent that I see a lot during my one-on-one discovery call with the investors or consumers out there. So one of it is legacy planning. All right. And second is dwelling property with good paper value gain. Thirdly, passive investment vehicle, buying in for additional income. And fourth, looking to cash in and out in the shortest period of time. That means these are people who wants to flip, but of course with seller stamp duty, the earliest runway we can flip is 3 years. Next, we need to talk about equity on hand because this is important. This will determine the unit size and type of investment approach that we could apply, and also the sector, which is the district that we are then accessible to. Okay. And thirdly, the strategy, very important. If you have an existing property on hand, should you be paying it fully or gear up? That means do an equity loan on it. That's what gear up means. Okay. And if you have an HDB on hand, should you sell off to avoid paying ABSD or keep it for passive income? All right. These are very real consideration that many investors met me, and then they ask me, should I do this or not? Okay. So how many of you have actually had such consideration before? When you are currently holding a HDB, you are thinking whether to sell it off so that you could, in a way, decouple to buy 2 properties. A lot of people are actually advising that. Or should you keep it for passive income? Because HDB is actually one of the highest rental yield, correct? Because you buy at such a cheap price, and then your rental is almost the same as a private condominium, correct? So if that's you, just type in the chat box me, so I know that's very real. And how are we going to measure this in terms of matrix? Okay, so just to divert a bit on, or not go deeper on this topic, some of the clients when I talk to, I told them that, look, when you buy this property, okay, with ABSD, that means you emotionally want to keep the HDB. You do know that you need to pay additional 12% on top of the normal 3 to 4%, right? That everybody pays. So a total of 15 to 60% on your next property in terms of tax. So they say, yeah, so KS, should I then pay it or not? I always go back to how much is your HDB is going to give you in terms of rental over this period of time. So for example, you're buying a $1 million property, which is that condominium that you're going to buy, and you're going to pay ABSD by keeping your HDB. And your stamp duties is going to be 120,000 plus your basic stamp duty. So the ABSD is 12%, all right, 120,000. So for example, you are renting, maybe you can get a rental of $3,000 every month, and the HDB is giving you. And over a span of maybe 12 months, it should give $3,000 a month, it should be 36,000. Okay. So I then ask you, over 120,000, which you are paying for this ABSD, how many years of rental from your HDB are you going to get back this 120,000? And the timeline works out to be about 4 years. All right. So over here, I then share with you, are you okay by renting out your HDB flat for next 4 years just to pay IRAS? And when many people hear that, they get a bit like, wow, that hits me hard, So the question here is very important. How are we going to measure the matrix or the frame of reference? A lot of people like to use that so-called 120,000 ABSD that I just mentioned just now on the property they're going to buy. But the fact of the matter here is this 120,000 is not caused by the next property, but caused by you wanting to keep your HDB. So the next frame of reference, I actually asked them that to think about is, do you think your HDB will go up by 120,000? If you think it's going to go up by 120,000, then go for it. All right. So if this gives you an aha moment or a moment of like, that's how you measure, just like in the chat box, insights. So I know that it is insights. All right. Okay. So next thing, anyone feel that it's insights or it's not? Right. Yeah, I know I talk very fast, but I hope you are able to catch up with me. All right. Because these are very important so-called point of reference that many people do not know, especially so when we talk about strategy. And strategy can be quite complex sometimes. So next thing, we need to talk about buying in trustee to avoid ABSD. What are the implications of holding period? And I know that government just came out with 35% ABSD on trustee, right? So if you feel that there's no way around this anymore, the fact of the matter is we have a way around it. And if you want to learn how to go about it, you can go on this QR code again. Okay, I have a lot of QR code, like I mentioned in today's masterclass. To click on this, you will link up with one of the leading lawyers, conveyancing lawyers in Singapore. His name is Kenny Singh. And he did share a lot on how are we going to abide with the 3 specific law of the ABSD trust deed, so that you are then able to take back your 35% ABSD within 6 months. All right. So if you have intention to acquire properties by way of trust and you feel that 35% ABSD is something that you are unable to get back, this will change your whole perspective. Okay. And the next 2 strategy, should you be paying the mortgage loan by CPF or cash? And lastly, which bank are offering the best clauses and interest rate or most suitable for you? Okay, and this is important because some of them want to exit their property during TOP. And at TOP, what it also means is last 15% is not dispersed. So if you get a bank letter offer that doesn't allow you to exit at TOP and you got to pay the remaining undispersed amount at 1.5% bank penalty, which is very real. Many people get caught into this and pay unnecessary miscellaneous fee without knowing that selling at TOP, you have to pay such penalty. Okay, so it is very important that you plan the entire roadmap from the onset that you enter the property. All right, so this strategy is very important.